Welcome to Gradient's weekly business roundup. Today's episode will cover the following topics. In a recent report detailing Sri Lanka's debt sustainability, Goldman Sachs research outlined three possible near-term external debt funding scenarios for the country. The first, a muddle-through scenario, assumes Sri Lanka will draw down on its bilateral and multilateral facilities without going for a new IMF program. The second scenario involves IMF engagement, and the third is a debt restructuring scenario where Sri Lanka would neither muddle through nor engage with IMF. From the first scenario, Goldman Sachs expects bond prices to continue to trade within the price ranges seen between March 2020 and now, whereas the second scenario of IMF engagement is expected to have a more positive impact on bond prices. The report further notes that in the long term, the ultimate goal of the government should be to return to a sustainable debt trajectory supported by structural reforms to diversify the economy and current account. Sri Lanka's external debt schedule beyond 2021, as per the Ministry of Finance annual report data, is as follows. Sri Lanka made an outstanding $1 billion sovereign bond settlement this week, resulting in forex reserves falling to below $3 billion. However, multiple funding streams are expected to bring in about $2.6 billion over the next 3 months. According to Fitch research, the consumer durables sector is most vulnerable to current import restrictions, whilst domestic manufacturers with products serving as import substitutions are to benefit in the longer term. Current regulations permit raw materials imports provided that 35% of value at minimum is added domestically. As such, Fitch rated corporates, domestic tire manufacturer Seat Kalani, footwear manufacturer and retailer TSI Samsung, and electric cable producer Sierra Cables were highlighted as companies positioned to gain from the prevailing import controls. Analyzing the current chemical fertiliser ban in the country, Fitch warned that it could negatively impact the plantation sector. It highlighted the Colombo Tea Traders Association's comment that overall tea production volume could decline by as much as 40 to 50% in future should the ban continue. Moreover, Fitch estimates that tea prices will have to rise to at least $5 per kilogram to offset a potential drop in yield, noting that as challenging as the highest price recorded at the Colombo tea auction was $4.3 per kilogram in September 2017. As per Fitch, industry sources believe the government has sufficient chemical fertilizer stock for the next 12 months, but there is limited visibility on availability of chemical fertilizer beyond this point. John Keells Holdings plc, the consortium partner to develop the West Container Terminal of the Colombo Port with India's Adani Ports and Special Economic Zones Limited, said that the design and structuring of the terminal is being finalised currently. The West Container Terminal of the Colombo Port is to be developed on a build, operate and transfer basis for a period of 35 years and would be a transshipment cargo destination capable of handling ultra-large container carriers. State-owned Bank of Ceylon made arrangements to secure a €30 million soft loan from a French financial institution to develop small and medium-scale industries. Bank of Ceylon had also recently obtained $150 million through the China Development Bank and the Asian Infrastructure Investment Bank. Haley's Fabric plc installed a rooftop solar power system consisting of 9,000 solar panels across 18,000 square meters at its Horena manufacturing facility, as a result cutting its carbon footprint by about 15% reportedly. The NCPI remained unchanged at 6.1% in June 2021, which is reflective of a high base in June 2020. Year-on-year food inflation decreased to 9.8% in June 2021 from 10.3% in May 2021, whereas year-on-year non-food inflation rose to 2.9% in June 2021 from 2.5% in May 2021. Core inflation, which excludes food and energy, declined marginally to 4.1% in the same month compared to 4.2% in May. The all-share price index at the Colombo Stock Exchange ended the week to 29th July 2021 at 8,140.76, up from 8,136.76 a week earlier. Foreign outflows from the market persisted, with year-to-date net foreign selling amounting to 32.3 billion rupees as per Asia Securities Research. And that's a wrap for today. Hope you have a great day. Stay safe and stay healthy.